Ebrahim, we've definitely seen a growing focus on ESG investment for institutional investors globally. But help us understand, what are the benefits of focusing on ESG?
So ESG, when you want to unlock the benefits of ESG, you really have to look at the methodology behind it. So when you're looking at environmental factors, social factors, governance factors, you're effectively looking at a company that has taken into account the needs of its stakeholders. You're measuring it on sustainable business practices. You're measuring it in terms of longevity, ability to withstand climate risks, ability to integrate into the community and serve social needs. So you're effectively looking at a company that should, over time, present a lower risk, either an operational risk or financial risk to the investor. Because by looking at a company that's thought of what could go wrong, that's thought of changing weather patterns, that's thought of how they can best serve their customers, and is looking and has sustainability and long-term effectiveness as a key driving strategy, you're going to have a company that should inherently be less risky, especially during cycles and downturns. On the other hand, when you look at the G and you're looking at governance, you're looking at a company, when you invest, you want to see how strong are the internal governance, how do they listen to feedback from stakeholders, how do they cooperate with regulators, etc. And that element on governance should reduce risk in the portfolio. It should lead to better communication with management, should lead to better transparency in the organization. And thirdly, you're looking at a multi-dimensional return on capital. Here too, capital was measured purely in terms of its financial return. But we can clearly see globally, especially with millennials, etc., the way they consume and how they want their consumption tied in with their values. You've also got through ESG a way of delivering multi-dimensional returns on capital that transcend just the financial returns, but also have a positive impact and contribute towards society as a whole. And I think in a world that's becoming increasingly digitized, increasingly globalized, I think people also want to see meaning in the way in which their capital is deployed. And I think by incorporating ESG principles into a fund managers have that opportunity to perhaps connect deeply with their investors in a way that they couldn't before. And I think that is probably the best win for any business, is to have that emotional connection with your investors.
What has this meant, though, for investment opportunities on the African continent?
So Africa, like most developing continents, there's a lot of opportunity to uplift people's lives. There's opportunity for development, etc. But it comes with the usual challenges. There's credit risk challenges. In certain jurisdictions, you may have political risk challenges, etc. But these challenges are not different to any other investment that you do in a developing market. I think what's interesting is with ESG, there's another layer of challenges. And because of the nature of ESG, like we said, you want to measure, you want to track how well is a company doing, what impact has my investment had, and for that you need data. And what we find on the African continent is that collection of that data is sometimes challenging, and there's a lot of data as well. Sometimes there's too little data in a jurisdiction, other times you've got various providers of data, or the data is not nuanced for the particular needs of that investment. So notwithstanding traditional investment risks in developing markets, this availability of data, the ability to benchmark, to track outcomes, is an additional risk that ESG brings when looking at developing markets like Africa.
Help us unpack then how RMB is looking to address this challenge of analyzing the data effectively.
So when you look at, like we said, investment into Africa, it's key that we get ESG investment. It can really drive quite a bit of social development. So it's key that we solve these problems, because we want capital to flow to the developing market. We want to see those outcomes. So we've really put our minds towards looking at this problem of data and how we can solve it. And what RMB has done is they've created two platforms, ESG Now and ESG One, that absorb data from various data providers in the market, simplify the data, standardize it, and deliver it back to investors in a dashboard that they can use. But perhaps more importantly, besides that, it's also a platform where alternative data through time could potentially be loaded on. And as we see more Africa-specific data, it's a platform where that data can live alongside more mainstream data. And with the analytics in the platform, we can mainstream it, we can standardize it, so that fund managers can also begin to understand what are the trends and the opportunities, not only in Africa, but globally, and compare the two.
Sounds like you're helping investors make informed decisions.
Absolutely, 100%.